Perfect. What a great pleasure to be here again. It's been less than 3 years actually now since the inception of Spark, and I must say we really had some turbulent times, right? So we had what? We had still ongoing wars. We have soaring interest rates. We have an implosion of an important US bank, which affected heavily actually the whole ecosystem, free falling valuations of startups, and resulting pretty much in the dry up of available new funding for our companies. So all this created significant barriers for everybody to grow. So here today, I would like to discuss with 3 great entrepreneurs how actually they manage these difficult times. Maybe hear their war stories, understand better, to be better used to what is coming in the next couple of years. And let's see the three panelists that we have today is Nils, Jose Manuel, Ander. Please come on stage. No, you're there.
I'm here. Okay, perfect.
Everybody under the name, please. It's easier saying. Great. So, why don't we start with a small presentation? Huh? Do you want to present a bit yourself, what you did?
Sure. Yes. So, to keep it quick, I was an entrepreneur before. I founded a company called TicketBiz that I sold with in 2016. After that, I started 2 other startups, even a real estate business where we raised 150 million and is a theme that is now quoted in the stock market. And in parallel to all of that, I started investing in venture capital. And long story short, have 4 small kids, COVID hit, 4 projects in parallel, too many things. So I decided to focus just on one. And since 2021, I just do venture capital. And I'm the general partner or the founder, if you want, of Acurio Ventures.
So you went to the dark side, basically.
I went to the dark side. Yeah, exactly. After creating 4 companies. Anyway, dark side, latest fund we have is 150 million euros seed in Series A fund. We invest all over Europe. And that's a bit about us.
Great.
So my name is Jose Manuel from Barcelona, father of 3 daughters, 1 boy coming in January. I am almost 50, so I like big adventures. Co-founder of Privalia, which was a company that we sold in 2016, and now co-founder of 011H, which is a fantastic project. I think Jordi did a very good introduction where he seemed to me that he was the CEO of 011H because he spoke about democratization, demographics, digitalization, and sustainability. Our project is about making buildings sustainable and affordable through the use of technology, industrialization, and circular materials. No, so we are on the right spot to be right now. We are a team of 90 people. Super excited about the project. No, and I'm looking forward to sharing and to learning from you as well.
Great, Nils.
Good. Hello, I'm Nils. As you hear, probably German. I'm living right now for more than 10 years in Iberia. I was involved. Also have a long startup history. I built right now even 4 companies. One is exiting right now, valued more than 100 million euros. One of them 1.2 billion euros. Out of passion, I started in Mallorca a company called CASAFARI because I thought the real estate market is so opaque. If you ask right now anyone around how many 2-bedroom apartments are for sale in Gotico and Asia, nobody knows it. People will refer to Idealista, but it's a marketplace, a listing place. Nobody has the exact number. Nobody knows what's traded and the prices. Therefore, we created CASAFARI. Out of an idea, out of solving our own pain, right now we are 150 people, headquartered in Lisboa, Portugal, but of course operating. Spain is our biggest market, Portugal, Spain, Italy, France, Germany. I raised almost 30 million euros, and we have more than 50,000 clients, mainly from the professional clients, B2B clients.
That's great. So let's dig in directly. So just keep with you there. What do you think the last couple of years? I mean, they've been pretty challenging. We know we talked about quite a lot, but maybe you want to talk to the audience how this has impacted you and what decision did you take to navigate this challenges?
It was a very interesting ride, to say it in positive terms. When I built my first, or when I was building the first company, a company called BigPoint, we had back then Oliver Samba on board, pre-Rocket Internet. He was our board member. I learned a lot there. And we were used to build the companies highly driven by KPIs and make the business work. And everything from the first initial rounds up to building a business valued $650 million was secondaries. It was next rounds, investors taking money. And then I was active as an angel, founded companies. I wasn't so much on the operational side until I founded CASAFARI. And then I came into an environment where everything was about top line. Money is a commodity. And it became very different and very difficult. I heard about human resources. This is the key of all of us. And we needed to compete. We needed to compete on salaries. And every investor was telling me, that's the price, just pick. So we were only focused on top line. Top line growth and top line spending. And it didn't even matter if it works.
Because basically grow at all costs, right?
Growth at all costs, land grabbing, to say it very simple.
Mm-hmm.
And suddenly, due to wars, pandemic, or post-pandemic was also afterwards a crazy time. But you had a remote culture, you had a war, you had in real estate raising interest rates, what we didn't have. So it was a goal for the industry, and then to make it work. And the biggest challenge is going into a company culture and telling the people we are coming from fantasy land. Money is a commodity to. We need to be laser focused in making it work. And a lot of companies failed because there's not a problem, very easy. It's not a problem to produce top line. If I say, I spend 10 euros per user and I generate 5. I can buy users like crazy. But does it work in the end? This is a big question. And therefore, it's a totally different time right now. And it meets a lot of mental change and how to grow a business. It's the biggest challenge.
Mm-hmm. So you, what was exactly the shifts then afterwards? You had a business model that you had to switch from one day to the other, no?
I can tell you for a long time, also when we raised our rounds, and what I say, we raised around 30 million euros. I heard from a lot of VCs, you're fucking bored. Sorry to be so direct. Such a boring industry. You're growing so slow. We go on food delivery. We go on quick commerce. We do something else. And we said, but we are SaaS. We are sustainable. We have very solid revenues. So whatever comes in terms of volatility, that's our defensibility. And this is what pays into action right now. So I know a lot of companies, and it was unfortunately all of our clients in PropTech who were on the transactional side and not on the data side and supplier side, who needed to totally pivot because the business model didn't work anymore. The business model was built on low interest rates in an environment that money is a commodity. And suddenly, if you need to make the numbers work and you have a cost of capital, it doesn't work anymore. So that was, for us at least, a defensibility, but it's also a mindset question. You need to be very, very diligent in everything. The worst is that you can do as a company nowadays, say, I raised a round of 10 or 15 million euros. The next week, employees will come and say, I want to have a raise. And this is very counterproductive in hitting your KPIs.
Sure.
So you need to work like you don't have money. And then you make it work, and then the KPIs work.
Do you work like this so you don't have money?
I think we never had money, to be honest. No, when I see some businesses, I realize myself that we have always been struggling for growth and for cash and for many things. No, on the question of change, I would say we have been in Spain since 2006. I think the fundamentals of how to create and to run a business have not changed. The fundamentals, meaning a strategy as clear as possible, execution as strong and as linked to strategy as possible, and then two fundamental things or three fundamental things, which are people, culture, and methodology. For me, those are the fundamental things that have not changed in the last, at least in my experience, in the last 20 years. Okay. What has changed is and again, we have been raising capital since 2006. Privalia, just for Privalia, we rose something like 50 million euros. 011H, we have already rose 35 million euros. And I think what has happened in the last 4 or 5 years, I think that really the market has become much more dry. There is less capital available. Mm-hmm. Therefore, and I think that's good, we are all of us focusing not only on top line, but above all on bottom line and profitability. Therefore, prioritizing much more, therefore, being radical on certain decisions and to develop a business as close to reality as possible. No? So that's on how we live that. Having said that, what we are also observing on the VC industry is that the VC industry is happening, or is going through something that also happened to all companies, because at the end, VC companies are companies, by the way, no? Is that they are losing the innovative spirit, no? So at some point, all of us are born from innovation situation. So there is a new way of doing buildings at 011 age. There is a new way of financing companies at the venture capital space. And at some point, some venture capital firms stop being innovative and become too conservative. And therefore, they struggle to go a bit farther from their zone of comfort. So anything which is not SIS, anything that is not growing twice ARR per year, anything which is outside of the ABC, they are not financing. By the way, Tesla was never there, Amazon was never there, Media was never there, no? And by the way, 011 is not there and will not be there. So we have been having a lot of pressure from the capital raise that we're raising right now to be a full SAS. No, that's not our business. We're not going to go there. Okay. Mm-hmm. So I think that that's a claim, positive play, no, in a context. By the way, that I would like to also emphasize, no, me, myself, and our company is always super grateful, specifically to BBVA, to Spark, but also to the financial community, because what we have done thanks to financial sponsors, you know. But I think that we are losing innovation spirit, no, because I don't know if the innovation, let's say, inspirations are too far away from the business, but now nobody's taking decisions, or almost nobody's taking decisions out of their company.
Let's see. Do you hear this critic, right?
Well, because I would friend. I have a little review, but I will. For me, there is a reason behind all this. I think all this is cycles, and you see it always. You have the .com bubble. Everything was about grow user. That's the only metric that mattered, and it didn't matter the bottom line. And then it was a crash. And if you look at historically how pretty much all the tech industry or technology in general, not just internet, but technology in general, it's all about cycles. There is a big excitement, and there is a lot of money put. You want irresponsible matter in a way in business that are not sustainable, that not going to generate cash. We need to remember that a startup at the end is a company and they need to make money at some point. It doesn't need to be short term. You invest, that's why you have venture capital, but at some point need to make money, no? So the venture capitalists in this when the market is super hot, we forget about that. And there is like something called MOFO there is mist to fear out, right? And you use basically the market becomes a bit irrational, and the only thing important is it becomes growth, and that's happened in cycles. So the last cycle happened. There is a new cycle, in my opinion, happening in AI around this same thing.
And your portfolio companies, how did they actually react in the last couple of years? How did they fare? Did they change anything in the business model? What did they do?
Well, yeah, you need to adapt. For us, we were lucky because me being an entrepreneur, and I have a little bit the same experience that Jota here, that at the time we created our company, there wasn't too much venture capital in Spain, so we didn't raise as much money as probably other companies in Europe. So you always have to work with the scarcity of money. And that's what we like to see also in our companies, that they apply that. And for us, it was always investing in companies that we saw very clear that they were going to have a positive EBITDA at some point, and they were going to be profitable companies. That's what we're investing on. Sometimes we get it wrong, and of course, it can happen. But our portfolio struggled much less than usual because of that, because the business model we invested was a sustainable business model. We avoid food delivery, we avoid the e-commerce that you were mentioning, because we didn't see there was sustainability in those models. So we didn't do any of that. Actually, in 2021, we sold more companies, we make more money than we invested, because we didn't believe in what was happening in the market. So we're a little bit contrarian there, and I'm glad now in perspective it was a good decision. I'm glad we did it. But it's always this cycle. So in a way, right now we're in a cycle where market is more rational, and being more rational, they tend to be is like it goes from one extreme to the other. They are maybe too rational. It's like, oh, I don't want to do anything outside the box because I'm having a hard time to raise. How can I explain this investment that maybe, So you go for one extreme, like financing everything, to the other. And it's going to change in the next couple of years. It's going to go more to the middle or something more rational. And at some points, I'm afraid we will go again to the irrationality, another market of craziness, as we have seen already, as I say, in the AI space, in a small portion, but we're seeing it already.
And without saying any names, like if you look in the last couple of years, which are the biggest mistakes? Everybody talk about success. Which are the biggest mistakes that your companies, you think they were doing, and what did they do basically to correct them?
Well, I have biggest mistake. I have one very clear. I'm not going to say the name, but a company that was basically growing, was still with the mentality of 2021, growing top line super fast and being very aggressive. As venture capitalists, we don't control the company, right? So he's the entrepreneur who does whatever he wants. We can just tell him, but at the end, we're not a private equity. We don't control the company. So we're trying to tell him, look, you need to stop a little bit. It's time to conserve of cash. But he was saying, no, I need to grow this because like that, I'm going to make a round. And if I don't grow enough, I'm not going to make the round. The market has changed. Please stop. He continued. He actually got a one-term sheet of a fund who put a lot of money. It was almost a 50 million euros round. Problem is that fund at the end, with the market crashing, as we thought was going to happen, didn't decide to pull out of the deal. And the company has spent so much money that there wasn't a way to turn back. So that company went to bankruptcy in a stupid way. So you need to, one of the first task of a CEO is be mindful of the cash. That's your first task. You need to have cash in the bank to pay for everything. So that's important lesson, and especially in this market where raising money takes longer, you need to do it with more time, and you need to be mindful that the investors are probably extremely rational, to your point, too rational, taking too many risks. So that means being more conservative on growth and focusing more on the bottom line. But that's the market that we are at this point.
Any mistakes?
Yeah, I think some.
You're still here, so it's okay. You can talk.
No. I think some common mistake that we also did. I think because it tends to happen. No, I think it's related very much to Roberto, to your introduction, where you say that Spark, from my perspective, no, everything is very cool. The application is super fine. The pending is super cool. But at the end, you sell bank accounts. So you cannot forget what you do, no? And that's how we live our business, no?
Yeah.
We design and build sustainable and affordable buildings. Technology, which is fundamental to us, is a mean. Circular materials, which is fundamental to us, is a mean. Industrialization is a mean. So we cannot, let's say, get it wrong between the means and the purpose, no? So that's something that I think that we as entrepreneurs, as CEOs, sometimes we are, let's say, we like to match the dessert and we don't like that much the steak, no? And we like to invent technologies and software and stuff like that. But at the end, there's something here that you have to be super, super careful, no? That's one thing. Second thing, I think, and again, linked to probably, and they will not agree with me, but I think that strong founders have to listen all opinions, of course, but have their own play in their mind. Because investors, they have their agendas, they have their point of views, but you as a founder have your point of view. It happens, above all in difficult times, no, that everybody's having point of views, and at the end you tend to satisfy everybody because they were saying something that you have to kind of agree. No? So I think you have to stick to your vision. Having said that, being humble enough to consider other alternatives and to be open to find the right way. I think that the world is so complex now that it's not the case anymore, that there is some super top CEO that has a strong vision and this is about it, and you follow that. You guys, you follow me. No. This is about, okay, I think there may be something. I don't know exactly what. Let's go all of us and see if we can figure it out.
I totally agree with you.
Some mistakes you want to talk about?
Mistakes.
Yeah.
Right. I think, first of all, my basic rule is, and again, I do this for many years when I raise capital, I plan already. 10% is a write-off for failures. So if you raise 20 million, keep in mind 2 million, you will lose this. You hire the wrong people, and you need to pay settlement costs. You just, due to the speed of execution, you make mistakes. And exactly this is what happened to all of the founders that we know under the pressure and growing fast top line, entering at the same time multiple markets, hiring wrong people, hiring people just based on a CV and not with their entrepreneurial experience, just trying too many things at the same time and defocusing what you said, one of the biggest mistakes. And I think right now, the learning for me as a company is right now, or also another big learning. And now with this company, I'm very settled. I'm very happy of the investors that we have on board. Choose your investors very wise. I see the companies failing because they did exactly this mistake. They didn't have investors on board with the firepower to support you also in bad times. When everything is nice and fine, it's not a problem to raise venture capital. The numbers are fine. Anytime. There's everyone who wants to give you money. And all of us founders, we get plenty of emails, LinkedIn every day because from analysts and everyone just wants to invest in the rising star because that's a very simple thing. But once it gets a little bit rough, it's like sailing. And once you go into Blue 4, 7, 8, you need to prepare the boat. You need to be ready. And this is what I see when most of the people fail. And this is something to focus on, and this is what we learned. You're one team in the end of the board, with your board and yourself as founders and executive team.
That's great. And what practical advice would you give actually now founders who are raising right now around? Because I think it's getting better, right? You guys are invested a bit more. The numbers are going up, right? At least the investment numbers, So it's more positive environment.
Right? I think so. So after the war in Ukraine, as you were mentioning, there was a trimester where financing was still available because people were closing deals that were already starting. But after that, it became much more scarce. And we went from one extreme to the other. I think there has been a correction in the market. There have been several things happening. First, there has been the valuation has gone below even a historical average valuations. And there has been a hard reality to adjust for in previous investor who invested at a very, very high valuation, and for entrepreneurs also, it's not nice to have to do a down round. But I think everybody's adapting to the new reality. So that's making deals happen again. Mm-hmm. The second thing that happened is companies that saying that didn't go to the market because they didn't want to raise money in those conditions, or the money at the end finished. So they're starting back to the market and accepting those new valuations. And that's moving a little bit the market as well. And what has never changed is, I think, the seed Series A, where we focus the number of projects. What happened is there is less investor investing, but for good projects, there has been money in the past, even in 2022 and 2023, and there is still money. What is not being financed is, if you want, before it was maybe 50% of the project were financed, now it's more 20%, but that's actually what it needs to be. To be honest, I think it was too much before. There was financing things that didn't make any sense.
And the mix with venture debt and other kind of financing sources, you see this also coming. I mean, from our side, it's like it's been a lot of demand since since the inception actually. So and there's a real need there. You guys, I suppose,
I agree. So look, in this interim where you didn't want to raise equity because of the valuations and you wanted to preserve cash, a lot of companies actually done venture debt because it was a good mean to actually have enough cash to actually grow into your valuation. I think a main topic has been, okay, the valuation that I have wasn't realistic, realize that, and I need to grow into my latest valuation to at least get to that value, So venture debt is a very good instrument to actually help on that path. Mm-hmm. And we are super open for our companies to take it.
Okay, that's great. Good to know. And you, what do you think? What would you give us advice to depending on the sector as well?
Yeah, depending on the sector, I think so. I mean, in our case, that we are, let's say, a category creator, I would say, because we are creating a category. Our timings are different to other projects. Therefore, we need capital with our timings. Probably family offices, probably corporate venture is more a suitable partner to us than VCs that probably demand more speed. No, that's not our case. Those companies I mentioned before have been created along years, not in 1 to 3 years. So that's the kind of capital we're looking for. And of course, this capital is just a question to look for, and of course to do what is the best for the business for the long run. If that happens, capital will come.
So right now, you're already preparing for the next round?
Yeah, we're already raising capital. Yeah, we are raising 15 million euros.
50 or 15?
It's 15. 15 million euros. Yeah. We expect to be independent, autonomous financially afterwards. We have a radical focus on profitability. Radical. Each project that we are deploying for the largest developers in Spain, like Ulmia, Edas, or Metro Bacesa, is projects of 10, 15, 20 million. With good margins, because our way of building are lowest. Therefore, we are looking for that capital to bring definitely company to solid profit.
Mm-hmm. What about you? How do you prepare?
Are you preparing? I personally think this is a time of venture debts. I mean, I don't say this because we're here, but as a founder, you need to understand when you raise venture capital, there's one thing that you should keep in mind. It's 3x. Everything that you deliver below to your investors is a fail. So if you double the company valuation, it's not enough. And with venture debt, it brings you the discipline to work on your numbers and think about other ways. Maybe it's M&A. That's what we do. We acquire 2 companies. It's other ways, more traditional, to build a business. And another thing, what I think is really great, if you run through a venture debt process with an investor, and it's in fact a bank, you need to pay the money back. Huh?
I hope so.
This is how it works. While the VC says, okay, invest in 10 companies to work, and one is a rising star. It pays back the fund 10 times. A bank says it needs to work almost 100%. Maybe it can have one write-off out of 10 or out of 20. So going through the due diligence with a bank and with a venture debt provider is a great learning for the company, and it will give you the health check. Is it really right what you're doing? And do you have the right track to be able to pay this money? So therefore, I think this is a time for venture debt, and it takes away the pressure that you need to deliver in short time a 3x return. And you grow into much higher valuation without dilution of the company. So I think this is the time of venture debt.
Thank you. I think that's a great stopper here because our time is up. Thanks, man. Okay. Thanks a lot.